CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did. Because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along. You know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what there used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also local communities. System. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's a new week.
It's a new week. Well, that means it's Monday. And it feels like a Monday.
And it snowed again.
I know. You know, they said, they being the meteorologists, were like, hey, nothing's going to stick. It's going to be like a passing storm. And here we are in a snow globe.
I know. It's exactly like every time I keep looking over, it's like, it's snowing, it's not snowing, it's snowing. It is Monday, February 22nd. We got a lot going on, Tim, including watching a little bit of a pullback in tech stocks. A lot of it has to do with concerns over valuations. We are kind of all in on tech today.
Yeah, we are. James Chakmak is going to be joining us for the Drive to the Close. He's a longtime tech analyst, and we're going to talk to him about his picks for 2021.
Looking forward to it. Let's get you going, though, on this Monday with a check on that trading day, including those tech names. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. NASDAQ 100 index, let's begin there, down 1.5%, heading toward its lowest level in 3 weeks. Investors are questioning the appeal of expensive growth-focused stocks. NASDAQ Composite Index down 183, been down all day, lower now by 1.3%. S&P lower now by 5 points, a drop there of just about 0.1%. But the Dow, best level of the day, up 148 points, up now by about 0.5%. 10-year yield 1.36%, gold up 1.4%, 18.09 the ounce. West Texas Intermediate crude up 3.7%, 61.42 a barrel. Lots of good news about vaccines, and that is helping lift a lot of the travel names today, specifically shares of cruise companies. This morning we had Royal Caribbean rising to its highest in nearly a year after it said bookings continue to improve. That also lifted the shares of other cruise line companies. Royal Caribbean up now by 11%. Carnival up by 9.6%. Norwegian Cruise Line Holdings also up by 9%. Again, recapping, S&P down 5, a drop now of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. You are listening to Bloomberg Business Week. Thank you so much, Charlie. And now it's time for the Market Drivers Report. Well, let's just bring in Dave Wilson. Sometimes he gets a little music introduction. Sometimes we just delay it for effect. Hey, Dave, how are you?
I'm good, thanks. You know, here in New Jersey, the snow seems to have stopped for the moment. It's definitely, quite noticeable, though, around midday.
Right?
Yeah, absolutely.
You know what's also noticeable? Tech stocks selling off a little bit more than the broader market.
Yeah, I mean, Tesla certainly jumps out. It's down more than 5% at the moment. And you talk about, a volatile company, though. Certainly Tesla qualifies. And, you look across the group, I mean, really big tech in general, mostly lower. Facebook, the exception. It's up 0.2% at the moment. Charlie Pellet mentioned the travel stocks doing especially well. I mean, you've got some deal making, biggest gain, the S&P 500 belonging to People's United Financial. They're based up in Connecticut. M&T Bank's buying them for $7.6 billion in stocks. So, you can understand that gain. Discovery, which has two classes of shares in the S&P 500, both of them among the 10 best performers in the index on the day, thanks to earnings that went over well. And, they're following the example of a lot of other media companies and moving into streaming. They started a service called Discovery Plus last month, and, they're talking about how it's increased the number of what they call direct-to-consumer subscribers. So, you're talking cable and streaming. They had about 5 million at the end of last year. By the end of this month, they're looking at 12 million. So that's just how streaming is affecting the equation for them. And the better performer among Discovery's two classes up 9.7% at the moment. So, those numbers really going over well.
Hey, Dave, let's dive a little more into what's moving energy-wise. Energy is leading the pack up more than 4%. Take us into the trade that's happening there.
Well, I mean, we've seen energy stocks be relatively volatile over time, too.
And especially over the last week, right?
Yeah, I mean, there's been so much back and forth. It's been mostly down if you look back over the past several years. A bit of a recovery more recently. And, yeah, I mean, every energy stock in the S&P 500 has a gain of more than 1% at the moment. Best performer, I'm literally just sort of picking it out here, Marathon Oil up about 11%. That certainly gets your attention. Not that I can really find much in the way of specific news, but you think about what's going on in the oil markets.
Right.
I mean, you do have that connection, and crude up about 3% in New York trading. So it's certainly providing some lift to the energy shares here.
I do wonder, though, how much of the energy trade will ultimately be transitory. And transitory could be a few weeks, a month. It could be a few months or less. I just wonder, because of what's happening, certainly with the weather and what we've seen in Texas and so on. I just wonder, Dave, what are you hearing?
Well, you have that going on. It's one piece of the puzzle, but another piece is, you got to figure in the effect of the pandemic. I mean, people aren't necessarily traveling, even in their cars or their planes or whatever, the way they had been. You've got a certain amount of optimism at this point. Charlie Pellet mentioned what's going on with the travel stocks, so some anticipation of a recovery. And if that happens more broadly in the economy, I mean, that certainly means more demand for energy. So, I mean, you wonder how much of that is already in the price of crude and therefore in energy stocks, but at least that's something going forward that may influence the equation in terms of this group.
Well, but, I guess I felt like we had kind of oversupply for such a long time. And is it just a case of people are offline, there's not so much production happening because of weather, because of the shutdown, because of COVID, and then once that gets online, does the energy market does equilibrium kind of come back?
Well, you've always got that sort of back and forth between supply and demand. But of course, you can go back to last April when we were talking about crude being below zero. And, it's been, sort of slow and steady over time. But you've seen the price pick up in the last 4 months or so. So it's not like, everything being shut down last week or whatever is really kind of the whole story here by any means. And it really is a matter of, are people kind of looking too far ahead in terms of a recovery in demand along with the economy? I mean, that's certainly something you have to look at.
There is part of me that thinks that once things come back, it's just going to come roaring back, because I just think people are so, fed up.
You're speaking for me right now. Where it's like I was telling a friend, it's like Groundhog Day every day for me.
I realized that over the weekend. Like, we really have nothing to look forward to. Every time we had a week, it's kind of the same choices, like got that. And it's like not having that aspect of your life. It's really kind of rough.
Yeah, it is. And look,
And I'm grateful for what I've got,
exactly.
and I'm healthy.
I was just going to say,
my family is.
we have a lot to be grateful for
Yes.
as this has been such a challenging time for so many, and ourselves included. But at the same time, I think there is this feeling right now. Here we are in the middle of February. It's cold outside, and a lot of people are thinking, wow, it's been almost a year that we've been attempting to live this new normal.
Dave Wilson, you'll be back a little bit later on with your stock and chart of the day. Having said that, Tim, you brought up, was it in the Wall Street Journal? There was an op-ed about, things coming back to normal maybe by April.
Yeah, that was, look, we asked our doctor from Johns Hopkins University early today, Gabe Kellen, a colleague of the doctor who wrote this op-ed. It got a lot of attention over the weekend because it said April was when we will reach herd immunity. And Dr. Kellen saying on Quick Take earlier today, hey, that is not a timeline I agree with. I don't agree with the data that he used.
But it's interesting, too, he talks a lot about natural immunity.
Yeah.
Like, there's things, this is why when we get these stories, these headlines, whether it's about the vaccine or about what's happening in terms of immunity, that we really understand what's going on, because there's lots of data points. In fact, we're going to get into a Business Week story that is just about that. And one person who, while working at home in his parents', maybe basement, maybe not, figured out stuff when it comes to COVID.
Yeah, I love it. Ashley Vance is joining us, on the 27-year-old who became a COVID-19 data superstar.
And listen, we're going to do a lot on technology. We've got the CFO of Twilio. We've got James Chakmak, who knows so much about the technology world. So we've got a lot, including China moving to a cashless society. I love this column by Andy Brown. In the meantime, let's do the Bloomberg Business Week Bite of the Day. One number, Tim, that tells us a lot? 210 million.
Not everyone is complaining about the power outages in Texas. The energy crisis delivered a $210 million windfall for Macquarie, thanks to the gyrations in power and gas prices that fetched it higher prices for immediate delivery. More of the bank's customers shipped gas to the state from other parts of the country. That's according to a person familiar.
Any crisis, anything that ever happens in our world, there's winners and losers, always. All right, lots to come on this Monday. First up, though, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Joe Biden says his administration is seeking to help small businesses by giving them exclusive access to the Paycheck Protection Program for 2 weeks. The director of his National Economic Council, Brian Deese, spoke about it with Bloomberg's Jonathan Farrow.
These steps we're taking today, even before we get there, are going to help a lot of businesses, the smallest businesses, including sole proprietors, people who run their own businesses who have been locked out today. So that's what we can do right now. We think that's really important in the immediate term.
400,000 small businesses have closed during the pandemic. The president says millions more are just hanging by a thread. Democrats are beginning the final push for Biden's stimulus this week. To hear the full conversation with Brian Deese, you can tune into Bloomberg Surveillance tomorrow morning, starting at 7 a.m. Wall Street time. Attorney General nominee Merrick Garland says he will follow the rule of law if he's confirmed.
The president nominates the Attorney General to be the lawyer, not for any individual, but for the people of the United States.
While Garland is expected to be approved by lawmakers, another of President Biden's nominees is facing an uphill battle. At least one Democrat, 2 moderate Republicans say they cannot support Neera Tanden to head the White House Budget Office. Dominion Voting Systems is suing MyPillow's CEO for defamation. The Trump ally is accused of spreading conspiracy theories about their voting machines during the 2020 election. Dominion is demanding $1.3 billion in damages from MyPillow CEO Mike Lindell. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So you are listening to Bloomberg Business Week. It's Monday. Carol Master along with Tim Stanovic. And among the virus stories that we're following, we've got a great roundup. First of all, I just want to get to the numbers. We're now with cases exceeding 111.3 million, deaths surpassing 2.4 million, and more than 205 million shots have been given around the globe.
And here in the U.S., we are approaching a grim milestone with close to 500,000 coronavirus deaths. Carol, just over a month ago, around January 20th, we were at around 400,000. So this last month, remember, deaths are a lagging indicator, but over this last month, 100,000 people have passed away due to COVID. It's just heartbreaking and staggering.
And I know how everyone says, listen, the cases are coming down, the hospitalizations are coming down, the expectations are the death numbers will come down too. But just keep in mind, we're still at some really pretty high levels, and it doesn't take much for people to get relaxed and comfortable, and then all of a sudden we see a spike again.
I'm really glad you mentioned that. It was a question that I brought up to Dr. Gabe Callan earlier on Quick Take today, and I said, hey, what about these good numbers that we're seeing? Lowest number of hospitalizations, number of daily positive tests that we're seeing, lowest numbers we've seen since October and early parts of November. He said, wait a second, October, early parts of November, numbers were bad then too. It's all relative to where we were.
Yeah, it's a really good reminder. I was watching an interview with Dr. Anthony Fauci over the weekend, and they talked about a lot of different things and where we are, and then ends with, okay, and wear a mask.
Yeah.
As simple as that. The UK Prime Minister, though, Boris Johnson, pledging to reopen England stores and outdoor hospitality from mid-April. He's looking to fully restart his economy from June 21st. So, hopeful, upbeat, the weather gets warmer. The whole idea, though, is hopefully that we have enough vaccines out that we can get ahead of the variants that are out there.
And we're starting to see positive news from vaccinations, not just in the United States, but worldwide. 2 new findings in the UK show that the shots provide a high level of protection against infection and illness. That's after a single dose.
I think this is a really important story, and this is something we're going to get into with our next guest. Very, very specific, and I think that is, giving people some more optimistic thoughts when it comes to where we go next. You're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, and you are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3-week low for the NASDAQ 100 index, high of the day for the Dow Jones Industrial Average. Technology shares pulling back on valuation concerns. Commodities rallying with investors pricing in stronger growth and faster inflation as the global economy recovers from the pandemic. Here's where we stand. S&P down 7 now, a drop of 0.2%. I mentioned the weakness in technology. NASDAQ down 193, down 1.4%. The NASDAQ 100 index down 1.6%. The Dow up, best level of the day now, up by 140 points higher, up by about 0.5%. 10-year yield 1.36%. Gold up 1.3%, 18.07 the ounce. West Texas Intermediate crude up 3.9%, 61.56 a barrel. Kohl's Corp says it rejects attempts by a group of activists to, quote, seize control of our board and disrupt our momentum, pushing back against a group that seeks to name 9 directors and overhaul the retailer's inventory. Kohl shares rallying, though, up now by 8%. Recapping, stocks lower. S&P down 7, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. And Tim mentioned earlier what everyone's talking about, those new findings in the UK, that how the COVID-19 vaccines are providing a high level of protection against infection and illness after a single dose. I mean, there's implications of this.
There are, but it's great news that, look, this is happening in real time. We've talked about this a lot.
Totally.
These vaccines are used under emergency use authorization. It means they haven't been tested in the same way that all vaccines are usually tested over a years-long period.
Right.
So we are learning things now that we didn't know yet.
Right. The data sets continue to come out. So let's get into it with Dr. Sandro Galea. He's back with us, Dean and Professor of Boston University School of Public Health, author of the upcoming book, The Contagion Next Time, that is due out in the fall. Dr. Galea, so nice to have you back with us. How are you?
I'm well, Carol. Thank you for having me. Good to hear from you again.
Well, it's great to hear from you as well. So tell us about this news out of the UK. And I think there's, what this might mean in terms of asymptomatic infection and, transmission of COVID. I mean, these are things that are coming out. Tell us about the significance of this, or what you see maybe as the significance.
Yeah, the vaccine has been consistently remarkable, really, vaccine use. I mean, we shouldn't forget as a world that we have achieved something extraordinary in terms of vaccines available in such a short period of time. The latest news shows that a single dose of the vaccine is highly efficacious in terms of preventing symptomatic COVID, but also, I'll get to in a second, preventing severe COVID. And that really makes a difference, right? Because we have been accounting for vaccination rates, assuming that everybody's getting 2 vaccines. But if we can have a lot of people getting 1 vaccine, that will allow us to do things much faster. On the Pfizer vaccine front, news also came out that the Pfizer vaccine can be kept in a regular freezer. It doesn't have to be in a -80 freezer, which from a supply chain point of view makes a big difference. So this really creates opportunities for national governments to stretch the vaccine much further than we have done so far, because of course, as you know, our limitation has been the manufacturing, that we have not been able to manufacture and provide as many vaccines as we need to vaccinate everybody as quickly as possible. So this is really all good. And you also, Carol, mentioned the variants, and the data are that this vaccine appears to be efficacious as well against the UK variant. Now, there's still some questions about the South African variant,
right?
But this is all positive.
So much of the early data that we see come from countries using the Pfizer-BioNTech vaccine, but we don't see many of these early results showing what's going on with the Moderna vaccine, which is the vaccine that so many Americans have been getting. Should we expect that we'd see similar results because they're both mRNA vaccines?
I think so. I think you can for a variety of reasons. One is the very similar mechanism, as you say, and the data that we do have actually show that the two work very similarly. We didn't talk in the first round about severe COVID. So what's the most amazing thing about these vaccines is that they have essentially reduced severe COVID dramatically, even much more dramatic than symptomatic COVID. And ultimately, that's what we want, right? Ultimately, we do not want COVID to be severe. So all the vaccine trials out there really has not been a single death from COVID in anybody who received vaccine. And that's in all the 5 vaccines that have been, whose trials, phase 3 trials have finished so far. So all these vaccines really are highly effective against reducing what we want them to reduce, which is severe COVID.
Right, and that's what it ultimately is about. Do you have confidence by spring, by summer, that we will have herd immunity?
Well, confidence is a tough thing to come by about things like that these days. I think the best models out there, including the CDC's own models, suggest that we will be getting towards enough immunity that essentially reduces rapid transmission. I'm avoiding the term herd immunity because it's become a bit of a loaded term.
Yeah.
By summer. Now, whether or not that means by the end of spring, beginning of summer, or by middle of summer, late summer, I think that's very hard to say. I think the big caveat that everybody says when you think about this, and all the good models say correctly, is that assumes the transmissibility of the virus as it is now, which means that doesn't take into account if any of the variants take over and they're much more transmissible, because of course that changes the whole formula.
You were hesitant about using the word herd immunity. Tell me why.
Well, I think that term, like many other terms as we've discussed on this show before, has become politicized. It has somehow, it's a term that has been used in infectious disease epidemiology for a long time, simply to mean when you have a population where there are not enough people who are susceptible to the disease, that it stops transmission. But the term has acquired these political undertones of, well, are we letting people get the disease intentionally, which obviously is not what it means. I mean, all it means is you don't have enough people who are susceptible and the virus stops transmitting.
Hey, Dr. Galea, look, these vaccines have been out for more than 2 months, at least here in the U.S. More and more people are getting vaccinated. Don't you think that people can start to act differently after they've been vaccinated, given how effective these vaccines are?
Yeah, it's an excellent question, and this has been, I think, controversial lately. I think what we're seeing is a lag in our guidance and in our systems that have been put in place to protect us with the reality of a post-vaccination world. And you've seen some more and more people writing, well, if people are vaccinated, is it not reasonable that once you're vaccinated, you can expect to re-enter the world much more fully? The short answer is yes, absolutely. The short answer is yes, absolutely. The problem is that we don't have enough people vaccinated yet to be able to say definitively.
All right, going to leave it there. Thank you so much. Really appreciate it. Dr. Sandro Galea, Dean at the Boston University School of Public Health, joining us on the phone from Boston. That was an important point he made.
Yeah, it's a big question that so many of my friends have right now, right? It's like our parents are getting vaccinated. When are we going to be able to see them? When can our kids see their grandparents?
Well, and this concern about can you get the vaccine but still transmit COVID? It's
Unclear.
really key. All right, you're listening to Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, and this week, one of the big things, Tim, that we're watching is that massive COVID relief package that the president is trying to get through.
Yeah, and look, the clock is ticking with some of these benefits running out by mid-March. They've got to get it done.
Yeah, so we're going to hear from his chief economic advisor. We'll get to that in just a moment. First up, though, back to your top business stories and Charlie Pellet. Hey, Charlie.
Thank you very much. And here's what's going on. We're looking at a possible record close today for the Dow Jones Industrial Average. Highs of the day right now, up 152 on the Dow, up 0.5%. We'll give you the numbers and then the why in a moment here. The S&P is up 7 right now. That is a gain of about 0.2%. NASDAQ up down 197. The NASDAQ Composite Index lower by 1.4%. NASDAQ 100 Index also trading lower today, down by 1.6%. Technology shares pulling back on valuation concerns while commodities rally. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers from the pandemic. Copper briefly rose above $9,000 a metric ton. 10-year yield 1.36%. Gold up 1.3%, $18.08 the ounce. West Texas Intermediate crude now surging 3.8%, $61.49 a barrel. A down day, though, for natural gas. Nat gas down by 3.8%. And again, NASDAQ now lower by 196, down 1.4%. The Dow pushing higher, trading now in record territory. As the pace of testing and vaccinations picks up, there are ongoing questions about when we just might meet so-called herd immunity and what that potentially could look like. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
I think one of the key important points to remember about herd immunity is that you can have generally herd immunity, meaning that cases really don't have a good opportunity to keep spreading. But then you have communities where there's a lot of vulnerability. People haven't been vaccinated and few people have gotten infected that could wind up with pretty serious outbreaks as well as hospitalizations and deaths. So general herd immunity can leave some serious pockets.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares down 0.6%, BioNTech down 0.2%, AstraZeneca up 0.3%, Moderna down now by 5.8%, Johnson & Johnson little change, down less than 0.1%. Recapping, stocks trading mixed, S&P down 7, now a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. White House's chief economic advisor, Brian Deese, said inflation is a risk that bears watching. Speaking in an exclusive interview to Bloomberg's John Farrow, Deese also addressed criticism over the size of President Joe Biden's $1.9 trillion aid plan.
Let's just talk about the changes you've made to the Paycheck Protection Program and talk to me about how that's emblematic, so to speak, of a broader approach from this administration to aid, to stimulus.
Well, the president is really focused on making sure that American small businesses have the support they need to make it through a devastating period of time in our economy. And so today he announced that we're going to really zero in on providing support to those smallest businesses with less than 20 employees that represent 90% of the businesses in this country, but often have a hard time accessing government assistance. So what he announced today was that starting Wednesday, for 2 weeks, those smallest businesses with less than 20 employees will have an exclusivity period to apply for loans under the Paycheck Protection Program. And really the goal is to make sure that those businesses out there that are hurting, that may think that they're ineligible for support because they were at the back of the line, well, we're going to put them in the front of the line and make sure they have access to the support they need.
Brian, this is really targeted, but as you know, the debate of the moment is about the size of the overall program you're looking to push through in the coming weeks and months. A debate of the moment of whether this is just simply too big relative to the output gap, the gap it's trying to fill. Brian, what gives you the confidence that this is the right size? $1.9 trillion is the right number?
Well, let me say first, these steps we're taking today, even before we get there, are going to help a lot of businesses. The smallest businesses, including sole proprietors, people who run their own businesses who have been locked out today. So that's what we can do right now. We think that's really important in the immediate term. When we turn to the package, look, we sized this based on the needs that we see to get shots in people's arms, to get the schools reopened, and to get relief to families and businesses out there. And as we look at this, we look at the estimates out there of not only the output gap, but also the amount of pain we see in the labor market. 10 million people out of work still in this economy. We think that this is appropriately sized and, frankly, the right kind of economic prescription to what is a unique and really precarious moment in our economy.
Well, let's start with where the opposition is coming from, where the questions are coming from. Then we can talk about the economics. We're talking about Larry Summers, a former Democratic Treasury Secretary, Olivier Blanchard, formerly of the IMF and widely considered to be a dove. These are not exactly Republican cheerleaders that are raising the biggest questions of your administration right now. And Brian, I just wonder, are you disappointed by that's where the questioning, the opposition seems to be coming from?
Look, we're having this debate across the board, and we welcome the opportunity to explain the contours of our plan. I think one of the things that's unique about this economic crisis is that this is a unique crisis and a unique pandemic-driven recession. And so we think about this, what the economy needs from the perspective of more akin to a natural disaster than a typical recession. We need to surge resources and support. And we've also seen over the past year an approach that says let's wait and see and take incremental steps has not worked and has put us in a pretty deep hole. So we feel pretty confident on the economics that this is the right way to go, to make the error in the direction of doing something that will definitively get our hands around this crisis and drive us to a stronger and more durable recovery going forward.
Have you spoken to Summers or Blanchard in the last month or so?
So we're reaching out to economists and economic experts across the board, including the folks you're mentioning. We want to make sure that we're getting input from all sides, that we're considering arguments. And I want to be very clear. We take very seriously the risks, the economic risks that are out there. We spend a lot of time thinking about them, a lot of time worrying about them. That's our job. But as we assess and balance those risks, we believe that the risks of further scarring in the labor market, the risks of further extending this economic pain outweigh the risks of doing too much, which is really the theory behind what we're trying to get done.
And that's Bloomberg Television and Radio's John Farrow catching up with the U.S. National Economic Council Director Brian Deese. To hear that full conversation, tune into Bloomberg Surveillance tomorrow morning starting at 7 a.m. Wall Street time. Listen, it's the 3-week congressional dash. They are trying to get that massive COVID relief program through.
Yeah, and they have to do it without Republican support, at least at this point. Republicans wanted to chop it up into smaller pieces. The White House does not want to do that. And they want to go through, they're going to use the reconciliation process to get this done.
Right, and as you mentioned earlier, and listen, we're watching the clock on this one, TikTok, because there's a lot of benefits that are going to run out very soon, and that will certainly impact a lot of Americans.
Yeah, that's why this is that's why it's urgency now. And in a sense, because Trump's impeachment is done, it gives them an opportunity to do this.
This is Bloomberg. It is time for Check on World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden's nominee for Attorney General, Judge Merrick Garland, won praise from both Democrats and Republicans at his Senate Judiciary Committee confirmation hearing.
Ranking Republican Charles Grassley, who shelved his nomination to the Supreme Court 5 years ago, called Garland a good pick for Attorney General, and he asked if the White House would influence the investigation of Hunter Biden.
I would not have taken this job if I thought that politics would have any influence over prosecutions and investigations.
Chairman Dick Durbin asked about policy at the Mexican border.
I think that the policy was shameful. I can't imagine anything worse than tearing parents from their children.
Republicans also prodded Garland to continue probing the decisions to investigate Donald Trump's presidential campaign. In Washington, Irv Chapman, Bloomberg Radio.
UN Secretary General Antonio Guterres is speaking out against the rise of right-wing extremism in the U.S. and around the world.
The danger of these hate-driven movements is growing by the day. Let us call them what they are. White supremacy and neo-Nazi movements are more than domestic terror threats. They are becoming a transnational threat.
Well, we'll hear this week from law enforcement concerning the January 6th riot on the Capitol. Hearings are set to look into the failings that led to the attack. Capitol Police Officer Harry Dunn spoke with ABC about what he experienced.
Everybody wants to say that it was about politics and everything, but it was a large number of people in that crowd that were racist.
Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar along with Tim Stanovic in our Interactive Brokers studio in New York. So empty nesters are saying, yeah, I'm not leaving the nest anytime soon because I got some chickadees still in the nest.
I love the way this story opens up. I was reading and I just chuckled because I know a lot of people who are living multi-generationally right now. I'm talking about my brother, for example.
What's your brother's name?
My brother's Michael, and he's, in his late 20s. He lives in L.A. He has an apartment, and when things got bad in L.A., he went right to visit my parents.
It's happening to a lot of
I
folks.
know.
Listen, we saw this after the financial crisis as well. It was tough for a younger generation to get jobs with everything shut down after the crisis. We're seeing that the same way. And this story talks about Janet Siegel planning to sell her Long Island house in 2020. That was before her adult sons moved in to ride out New York City's lockdown. She's not listing the place anytime soon, despite frenzied buyer demand at unheard of prices.
Yeah, this is happening a lot right now, but also at the same time, Carol, it's a classic tale of supply and demand. Economics 101, right? There is so much demand for these types of homes right outside of metropolitan areas, New York City and surrounding suburbs, totally included in this case. And since the demand is so high, at the same time, people are not leaving their homes, so the supply is not there. And traditionally, these are the type of folks who would sell and move somewhere else. But the problem is well, now they are no longer empty nesters.
It's pretty wild and such a change in trend. But you're right. It goes back to basic supply and demand. So folks who are looking for them, there's just no homes to buy. And it is really pushing up prices. This is one of those trends, the whole housing trend as a result of the pandemic, people leaving the cities. I do wonder, does it, how much comes back and how long it takes to get there? Because I'm not worried. New York City is going to come back.
It's going to come back. A colleague of mine who works with me, I will not say his name.
It's not Michael, your brother.
It's not my brother. He moved in with his parents outside of the city, and he recently just signed a lease. He's on his way back to the city starting in March.
I know a lot of people in New York who are moving. They're able to move up, get more space at a better price because right now, to some extent, in New York City, prices are down a lot. Anyway, empty nesters, it ain't happening. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Copper briefly above $9,000 a metric ton for the first time in just about 9 years. Bitcoin now down 4.1%. S&P lower by 10, drop of 0.3%. The Dow Jones Industrial Average could see a record close today, up 131 now, up 0.4%. The NASDAQ 100 index down 1.3%. The NASDAQ Composite Index down 1.6%. Technology shares are pulling back on valuation concerns while commodities rally. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers from the pandemic. But Oracle shares, they're surging up 5.8%, the most since September, after Barron's picked the software company as a new giant in cloud computing. We've got the 10-year yield at 1.36%, gold up 1.4%, 18.09 the ounce, and West Texas Intermediate crude up 3.8%, WTI 61.49 a barrel. Again, recapping, S&P now down 10, drop there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. February is Black History Month, and throughout the month, Bloomberg Radio is celebrating pivotal moments in U.S. Black history. Here with more is Bloomberg's Renita Young.
On this day in Black history in 1989, DJ Jazzy Jeff and the Fresh Prince win the very first rap Grammy for the crossover hit.
You parents just don't understand.
But the duo, also known as Jeff Towns and Will Smith, were not there to pick up their award when it was decided that the Soul Rap Award would be announced during the non-televised portion of the Grammys. The hip-hop world boycotted. Smith at the time called the idea of an afternoon award
a slap in the face.
While there were some critics, supporters of the boycotts thought the stance helped the duo cement what would become decades of success in music, television, and film. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. This story, it is still among Bloomberg Business Week, or I should say, this is still among the most read on the Bloomberg terminal. And it's by Bloomberg Business Week feature writer and New York Times bestselling author Ashley Vance. He wrote this story. He's also host of Hello World and author of Elon Musk's Tesla, SpaceX, and the Quest for a Fantastic Future. He's on the phone from Palo Alto, California. He joins us along with Bloomberg Business Week editor Joel Weber. And it's about this 27-year-old who actually, living at home with your parents, Joel, can be a good thing.
Yeah, and Ashley, I thought, did this amazing job explaining about this 27-year-old who became a COVID-19 data superstar. And Ashley, why don't you just take us away here? What's his story and what's so significant about what he's done?
Yeah, I mean, this is an interesting story that kind of pulled me back to the early days of the pandemic. But there's this data scientist. His name is Yu Gu, and like you mentioned, he was 26 at the time. He's 27 now. But, if you go back to March and April of 2020, we were getting all these forecasts for how bad COVID might end up being. And there was Imperial College in London that was putting out a prominent forecast, and IHME, which is an institute based in Seattle. And these forecasts were all over the place. One group said, the U.S. alone might see 2 million deaths by the summer. IHME said 60,000 deaths, and the pandemic was going to wind down quickly. And so this kid saw these models and the figures all over the place, and he decided to get into forecasting deaths on his own, and he turned out to have pretty much the most accurate forecast all the way up through about November.
All right, so Ashley, how did Gu do it? What were his data points? I mean, this is a guy who understands algorithms and analytic modelings.
Yeah, there's kind of two things to it. I mean, one is he looked at the models that were out there, and he said even though these people were professionals and he had no background in this field at all, he said, they're putting too many things in their models. So I'm going to keep mine really simple. I am just going to look at the death figures being reported by governments and then predict future deaths from that. And then he had a skill at machine learning software and basically AI algorithms. And so he applied that to his figures to constantly tune them over time. When the real death figures would arrive, he would compare that to his forecast. And so he kept tuning his model. So he kind of kept it simple in some ways, but then added this new sophistication that some other people were not using.
What can we learn about modeling here? Considering that there were so many professional organizations, Ashley, that didn't get this right, but this then 26-year-old was able to do this much more accurately.
Yeah, I mean, I guess there were a couple of things I picked up from my interviews. You know, one is that I was surprised that sort of this field wasn't, you know, already dialed in, and that there weren't sort of like tried and true things that we knew you could go to. And so, you know, his argument and the argument that some other people made to me is that academics, professors, people at some of these institutes, they tend to try and make their models more sophisticated and nuanced by adding complexity, because they're kind of trying to show off and do something new that their peers aren't doing. And so, you know, he went the simple route. It was like, no, this is actually how you get closer to the truth. And the other thing is that, you know, we've seen over time that the individual models really do not work as well as taking 20, 30, 40 models together, blending them, and then looking at what that blended model tells you. And so, you know, a big takeaway was the next time there's a health crisis, you don't want to place too much stock maybe in these individual models that come out in the first week or 2 weeks of the crisis. Hopefully we'd be in a better situation where there's numerous models right from the get-go that we can kind of blend together and get something closer to the truth.
So what's Gu doing now, and what does he think he'll crack next? It seems like, you know, this kind of modeling, you know, you go work at a hedge fund and make billions of dollars. Is that what's in store?
Well, this was the funny. I mean, it's an interesting part of the story. I mean, he was in finance. He was doing trading forecasts, and then right when the pandemic started, right before it started, he had decided to do a startup with a buddy. He was going to get into sports analytics. He was pretty cagey about telling me exactly what it was. It sounded like some sort of like maybe sports betting thing or something like that. And then, you know, he volunteered his time during these death forecasts and has been sucked into the public health world. And now he's getting recruited by all kinds of folks, and I think he's kind of like changed the course of his life. I think he wants to get into public health now. He's sort of he's kind of averse to all the politics and the money that's in it. He just wants to be a pure data-driven guy.
Well, but what actually has happened to his data sets now? Because from what I understand from your story, he kind of stopped, right?
Yeah, well, he stopped the death forecast around October, November, because everybody's numbers started to kind of coalesce around a pretty similar place. Now he's forecasting basically kind of herd immunity. He's looking at the vaccination rates, how many people have actually caught COVID. He thinks a lot more people have caught it than sort of the official numbers report. And so he's trying to model out kind of where we might end up. And so for the U.S., you know, herd immunity is kind of like a sort of a vague, nobody knows exactly what the right number is on that. But, you know, he has us in the U.S., about 65% of the population would either have the vaccine or have already caught the virus and be approaching something like herd immunity by June.
All right, we'll timestamp it.
Yeah. It's impressive. Was he living in the parents' basement? That's what we just want to know when he did this.
Yeah, he was in Santa Clara, so I live out here in Silicon Valley. We don't really have basements, but definitely a living room at least, or like a side room. And yeah, so he was staying with his parents during the bulk of it. He's moved He's moved to New York.
All right.
Next chapter.
Well, we look forward to see what more on that next chapter. Ashley, thank you so much. Ashley Vance, futures writer at Bloomberg Business Week, on the phone from Palo Alto, along with Jill Weber, editor of Bloomberg Business Week, on the remote access from Brooklyn. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Coming up next, a couple of columns from our own Andy Brown.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We enter the final hour of trading on this Monday, February 22nd, with the Dow at a record. Bitcoin now lower by 3.6%. And today we saw copper briefly trade above $9,000 a metric ton for the first time in 9 years. Right now, a mixed picture for U.S. equities. The S&P, NASDAQ, both trading lower. The Dow higher. Dow at a record, as I mentioned, up 141 now, higher by about 0.5%. The S&P is down 11, lower now by 0.3%. NASDAQ down 224 for NASDAQ, a drop of 1.6%. 10-year yield 1.37%. Gold is up 1.3% at $18.08 the ounce. And West Texas Intermediate crude up 3.8%, $61.49 for a barrel of WTI. Fed Chair Jay Powell can expect pressure to support the stimulus plan of Democratic lawmakers when they host him this week on Capitol Hill for the first time since regaining control of Congress, and testimony tomorrow. As for the outlook for interest rates, Ashok Bhatia is Chief Investment Officer for Fixed Income at Neuberger Berman.
I don't think there's going to be any change to what Powell has to say. Fed's on hold. Fed's not going anywhere, and they're not even thinking about interest rates. So the Fed is going to be, for the next quarter or two at minimum, a pretty, minimal story, we think, for the markets.
Travel stocks are surging. Royal Caribbean rose to its highest in nearly a year after the company said bookings continue to improve. Shares of Royal Caribbean, they are advancing now by 11%. Carnival Corp up 8.9%, and the Norwegian Cruise Line Holding up now by 8.5%. Two of the biggest American tire companies are joining forces. Goodyear Tire and Rubber is acquiring Cooper in a deal with an equity value of $2.8 billion. Shares of both companies rallying. Goodyear up by 22%. Charlie Pellet, Bloomberg Radio.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. It's brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/IMS. Well, there are, Tim, a couple of provocative columns on China to tell you about today. One, about China's plan for a cashless society and the goal and implications of such. That's something to come. And then something that's already here, China's massive and impressive infrastructure and how it's really time for the U.S. to get worked up about it. I love these columns, thought-provoking. And let's get into it with Bloomberg New Economy editorial director Andy Brown. He writes about both. He is on the phone in our New York City bureau. Andy, I know you're just around the corner, one floor down, but we're all socially distancing. Great columns. And I have to say, these two stories remind me in many ways how China is way ahead of the U.S. and the rest of the world on so much already.
Exactly. I mean, these blackouts in Texas illustrate the perilous state of U.S. infrastructure. And it's not just the power grid. It's the transportation network. It's highways. It's railways. It's airports. It's telecommunications networks. And in all these areas, one can't help but compare and contrast with China, which is streets ahead. I mean, this has risen to the level, I think, of a national security threat for the United States. I mean, it goes to the heart of economic competitiveness, military readiness, climate change resilience, innovation capacity. You've got a situation now where China has rolled out a 5G network, and America hasn't really got started. And it's giving China a jump on all of the industries of the future, from smart cities, advanced manufacturing, autonomous vehicles, and so on and so forth. This is the way to compete with China. As Joe Biden is trying to say, is we need to invest in infrastructure or China is going to come and eat our lunch. And actually, in area after area, China has already eaten America's lunch.
So what's the way to do this in Washington, where at this point, many Republicans will not even acknowledge that there was a free and fair election that elected Joe Biden? What I'm saying is there is not broad agreement across the challenges that America faces, or perhaps the solutions to those challenges.
Well, Well, I guess what I'm saying is the first step is to recognize the threat. And America has been here before. Back in 1957, there was this Sputnik moment, right, where Russia launches this satellite that around the Earth. And suddenly the Eisenhower administration freaks out and realizes that Russia is leaving America behind when it comes to space. And he invests, he launches NASA, he makes massive investments in science and technology, which ultimately give rise to Silicon Valley and spawn the likes of Facebook and Google and so on. The danger now, as Eric Schmidt pointed out in a piece just the other day in the Financial Times, is that the next tech giants and the products and the services that they produce are not going to be American. They're going to be Chinese.
Right. And of course, Eric Schmidt, the former chief of Google. Andy, you know what? Why aren't we scared enough as Americans in terms of how advanced China is getting on a lot of things? And they are very clear about their mission, their long-term planning to be much more advanced on a lot of sophisticated areas and industries.
It's a really good question, and maybe it's because there wasn't this one big dramatic event like the launch of Sputnik that this has really crept up on America. I mean, I lived there for more than 20 years and saw this happen. I mean, the build out of their high-speed rail network was phenomenal. I mean, they now have the most extensive high-speed network in the world. In fact, it's longer than the rest of the world's network combined. And by the way, it's about to double again by 2035, and all of this was accomplished in a decade. I mean, Joe Biden was talking to senators the other day and was saying, we need to pay attention to China's railway network. Well, yes, he's a guy that used to travel every day on a train.
Amtrak Joe.
Amtrak Joe between Delaware and Washington, D.C. It took him 90 minutes. If he'd sat on a similar length train, it's about 100 miles. 100 miles in China, you do that in half the time. You do it in 45 minutes, and it works like clockwork.
Yeah.
Hey, Andy, I was in Shanghai a couple of years ago with graduate school classmates, and we were there on a school trip, and some classmates of mine went to buy something in the mall that was close to our hotel. They had cash and credit cards. They couldn't buy something because they hadn't downloaded the app that so many people in China use to actually pay for something. So they ended up coming back empty-handed. What's China doing by eliminating cash?
Right. So, well, yeah, exactly. So for a long time, basically, there was no need to carry cash at all. When I would go out in Shanghai, I mean, it didn't occur to me to take notes. I mean, everything is swiping your barcode, whatever it is you're buying. What they're now doing is launching a digital currency. They're going to do away with notes altogether. And China invented the banknote, by the way, about 1,500 years ago. It was one of the things that Marco Polo marveled about when he traveled to China in the 13th century. They're going to get rid of notes. They're going to get rid of coins. It's going to be a digital currency. And not, by the way, the Bitcoin that we've been hearing about today. I mean, this is not your distributed ledger, your anonymized transaction. This is a central bank-issued currency, which is going to give the central bank absolute visibility into every transaction in China, every donation, every trade. The state is going to be in your wallet. This is Big Brother like you've never had it before.
It's fascinating. And what's interesting is I feel like China always wants to be much more part of kind of the system, but I feel like this will seclude them potentially, Andy, in just got about 25 seconds.
Yeah, they want it. They of course they want to displace the dollar. They want to have a global currency. Nobody wants to use a digital currency overseas with the knowledge that the Chinese state has absolute visibility, has eyes on it. I don't think so. I mean, so it'll work in China, but internationally, highly doubtful.
Oh, it's fascinating. I want to do more on this. I love this story. And Andy, thank you so much. Really appreciate it. Andy Brown, he is Bloomberg New Economy Editorial Director. Check out his columns on the Bloomberg and at Bloomberg.com. We have to talk more about this one because I think that's a big deal.
Yeah, it's a huge deal. That kind of access by the government
is amazing. You're listening to Bloomberg. All right, let's get a check on world and national news. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, thanks, Carol. Attorney General nominee Merrick Garland has been taking questions today from the Senate Judiciary Committee as part of his confirmation. He said the work of the Justice Department must be guided by the rule of law and that the U.S. is still striving to achieve equal justice under the law. He was also asked about the violent attack on the Capitol.
I will supervise the prosecution of white supremacists and others who stormed the Capitol on January 6th.
Garland, who led the prosecution into the Oklahoma City bombing of a federal building, says the U.S. is now facing a more dangerous period of domestic terrorism than the run-up to that bombing. President Biden is making changes to the Paycheck Protection Program and will give priority to small businesses and nonprofits over a 2-week application period.
Since the beginning of this pandemic, 400,000 small businesses have closed.
The application period begins Wednesday. The Supreme Court is clearing the way for a New York grand jury to get their hands on former President Trump's tax returns. Bloomberg's Greg Storr covers the court and explains the significance of today's ruling.
It's so important because this could be the biggest legal threat that he faces. This is an investigation by the Manhattan District Attorney Cyrus Vance Jr. It started off looking at the hush payments to Stormy Daniels and to another woman, and according to some court filings, has expanded beyond that now.
Vance can now require Trump to hand over his returns. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So a little levity here because reading in this morning, there's a lot of serious stuff going on, and rightfully so. We got to pay attention to it. But this story, I had to stop and read it, and I'm like, I got to click on the video and check it out because Citi has this fun marketing thing that they're doing, and basically they use their head of consumer banking for Citigroup China, but they also have him starring in the ad, and it's a James Bond-inspired marketing campaign. It's very cool. And if you're watching on Bloomberg, our channel on YouTube, Bloomberg Global News, you can see him. That's him skiing down, running across. And there's a woman in the ad that apparently is also his wife.
This is amazing. So I want to try to do this article some justice. I'm going to read the lead right here. Okay, a man in a tuxedo sits at a mountaintop bar. His phone buzzes and he springs into action, stepping into ski boots and racing down the slopes. He's Buckley, Darren Buckley, head of consumer banking for Citigroup China, and also the star of the bank's James Bond-inspired marketing campaign.
The name is Buckley. Darren Buckley. It is really clever, and apparently their marketing team over at Citi came up with a video. They wanted to attract an online audience, and it worked. The 20-second video posted on June 4th garnered 2.3 million views in a week.
Yeah, talk about going viral, right? This is like the epitome of that. It's so hard to create this stuff, but they really seem to have hit the nail on the head.
It's really clever because over in China, I feel like TikTok and all of these apps, various social apps, like I think they're way ahead of us in terms of the usage, and this really seemed to resonate with a lot of people.
Yeah, Citi is one of 100 banks, including foreign rivals, pitching Chinese consumers, many of whom already have a card from one of the country's state-owned banks. As of June 2020, the top 20 Chinese banks controlled 99% of China's credit card issuance. That's according to Dong Zhang, an independent researcher who's covered Citi's credit industry for over 2 decades.
Da-da-da. I'm sure there'll be a sequel.
Yeah, I mean, you get millions of views. Of course there's going to be a sequel.
I mean, it's just really clever. And it's like I said, you need a break, like stand up, walk around, do a couple of exercises and watch this video because you'll have a lot of fun. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow now trading just below a record. We have got the S&P, NASDAQ both on the minus side. A lot of selling in technology today. Let's get all the details, find out what's going on in the markets as we head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed right now. And like you said, technology names are under pressure, but the reopening stocks are soaring today. It's currently up 105 points. S&Ps are down 18. NASDAQ falls by 1.9%. The U.S. 10-year yield at 1.37%. Gold trading higher by 23. And transports gain 176 points. Among the main 11 S&P sectors, financials and energy-led, utilities and tech were under pressure. And leaders to the upside in the Dow, Disney and Caterpillar both hit record highs. Intel and Nike led to the downside. After earnings, Royal Caribbean soared as much as 12.5%. And in deal news, Goodyear Tire is buying Cooper Tire for $2.8 billion. In other news, Bitcoin plunged as much as 16.5% before paring losses. And Cuomo said that New York City can reopen movie theaters. Wrapping things up, Palo Alto Networks reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And here live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. And I know you've been following this story and a couple of stocks related because, Tim, I have to say, when I read this story over the weekend, the pictures, I had to look at them several times for it to register about what had happened.
Everybody saw that video, I feel like, at this point, of the engine on the Boeing 777 on fire just minutes after taking off from Denver International Airport.
Right, and then pieces of it just in someone's yard. Like, it was just crazy. So let's get into it and find out what's the latest and what's going on. Let's get the latest from Julie Johnson, aerospace reporter at Bloomberg News, joining us from Chicago. And I want to mention that Boeing shares, I know, were higher earlier, and I'll take a look at the trade. Raytheon, though, was seeing some pressure. Raytheon, of course, the owner of Pratt & Whitney. Julie, good to have you here. So where are we on this story?
Well, the investigators are starting, to dig into the root causes of this. And the 777 jets around the world, and there weren't that many of them that had this particular engine on them, are all grounded right now. And crews are taking a close look at the engines to see if there are other cracking issues.
How long do you anticipate some type of investigation such as this lasts? When will there be some sort of answer as to the cause of this engine failure and other scares in the past?
Oh, that's a really good question. And these investigations tend to take a long time. The FAA is just super thorough about, examining causes. And I should just add that right now it's very early on. So it looks bad because there have been a couple of very similar incidents with this engine and these really old, very early 777 models. But yeah, it's early days.
Early days, so stay tuned, basically. I mean, what are we waiting for now? Like, what happens next?
Well, I think, we'll have to see, we'll have to wait for more details to come out from the FAA and from Pratt & Whitney, which is, the Raytheon subsidiary that made the engines. And so I don't know if how deep you got into the rabbit hole with this. I spent a huge chunk of my weekend on Twitter looking at, photos and videos, and what became apparent very early on was that two fan blades had broken off. And so I think the FAA is going to take a really long, hard look at the way that these blades are inspected, and so Pratt and mechanics around the world need to get into the grain of the metal to look for very early signs of fatigue that aren't visible to the human eye. They use ultrasonic tools for this.
It has been a very bad few years for Boeing, to put it mildly, with the 737 MAX disaster, the subsequent grounding of those planes. What does this mean for Boeing, given that it's actually a relatively small number of planes that are affected and seems to be less of an issue with the plane and more of an issue with the Pratt & Whitney engine?
Yes, and I think that's one of the reasons why we saw Boeing sell off this morning, and then the market sort of take a little bit of a deep breath. And so right now, I mean, this does not help Boeing. This is not great for their reputation. The optics are horrendous. But in terms of financial liability, at this moment, it doesn't look like this is going to be an issue for Boeing, and we're talking a very small percentage of the global fleet that's affected. And for Pratt, I've seen estimates that maybe it's a few cents of earnings potentially clipped.
I mean, but bottom line, Julie, and I should just update, Boeing had traded up about 1.3%. It's now down about 1.4%. And shares of Raytheon, owner of Pratt & Whitney, are down just under 1%. Who ultimately is responsible, though? Is it United and their force for checking on the planes? I'm just trying to figure out where the fault might lie.
Yeah, and that's going to be a great question for the FAA and NTSB as well. Now, I don't know if you'll remember, but back in 2018, another United jet was on its way to Hawaii and had an engine explode on the wing, and so the root cause looks to have been quite similar to what happened on Saturday. And Pratt, at that point, was asked by the FAA to go in and inspect all of the fan blades on this particular type of engine. And so in very short order, we had a Japan Airlines jet have an engine failure in December that was like this, and then the United plane on Saturday. So I think the FAA is going to be taking a close look at how Pratt measured the damage.
All right. We appreciate it. Julie, thank you so much. Julie Johnson, aerospace reporter at Bloomberg News. On the phone from Chicago, as I mentioned, Boeing down about 1.4%, Raytheon down just under 1%. Is it full? What?
Well, it's so interesting. These planes are designed to fly on one engine, but as Alan Levin told us on Quick Take earlier today, not when the aerodynamics change so significantly.
Yeah, exactly.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And coming up, we've got the chart of the day.
The chart of the day and the song of the day. Like I said, I spent all weekend studying.
You did not.
No, but I listened to a lot of music. Got the
Okay.
Spotify playlist to work out.
So you're ready,
Yeah, ready.
Did you listen to the Dave Wilson Spotify playlist?
Not yet.
Okay.
I'm going to.
Got to download it. All right, let's get to Charlie Pallett with another check on that trading day. Just about a half an hour to go, Charlie.
Indeed, we've got stocks trading mixed off session highs right to the numbers. We'll give you the why in a moment here with the S&P down 20 now, a drop of 0.5%. The real damage, though, tech stocks, NASDAQ down 290 now. That is a drop of 2.1%. NASDAQ 100 index down 2.3%. The Dow on the plus side up 100, up by 0.3%. But again, the S&P lower by 0.5%. Tech, by the way, dragging the NASDAQ 100 index to a 3-week low. As for the why, tech stocks are pulling back on valuation concerns. Commodities are rallying, bond yields rising with investors pricing in stronger growth and faster inflation as the global economy recovers. Copper briefly rose above $9,000 a metric ton for the first time in 9 years. Bitcoin slumping today, down now by 2.6%. New York Governor Cuomo says movie theaters will be allowed to reopen at 25% capacity on March 5th with no more than 50 people per screening. Movie theaters are the latest businesses the governor has allowed to reopen as COVID-19 cases in the state have dropped from their post-holiday highs. Dr. Joshua Sharfstein is vice dean of the Johns Hopkins Bloomberg School of Public Health, and he told us we cannot become complacent.
So right now, the cases are coming down, hospitalizations are coming down, deaths are coming down, but we know with 500,000 people who have died, just how serious this pandemic is, and we can't let up. We have to keep pushing it down so that we can really minimize the chance we get in trouble with variants or any other kind of problem.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track for you, Pfizer down 0.4%, BioNTech down 0.8%, AstraZeneca up 0.4%, Moderna hard hit today down 7.8%. Johnson & Johnson up by 0.3%. Recapping S&P lower by 21, down 0.5%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
Thank you, Charlie Pellett. This is Bloomberg.
It's Sting.
Carol's looking at me like I should know this.
Synchronicity.
Oh.
I love Sting.
Okay, but...
Am I not right?
Now, was it just Sting or what?
Oh, is it
wow.
Police?
Yeah.
Yeah, it's Police. Right. Sorry.
And actually, the
Sorry, everybody else in Police.
Okay, and that would be
The Police.
Andy Summers, the
Right.
guitarist, and Stuart Copeland, the drummer. But there were two songs with the title Synchronicity on the Synchronicity album.
That's
So,
interesting. Were they very different?
Yes, they were.
Oh, why did they
but
do
which
that,
one did
Dave?
we just play? One or two?
You know, you gotta. Can we just get some credit for Carol right now, just for for getting the song? That was a big deal.
Hey, look, absolutely. I give
Okay.
credit where credit is due.
I'm
I just
thinking-
want to point out this was Synchronicity 1.
Oh, it was. I was going to guess
Yes.
number 2.
And
Okay.
there actually Synchronicity 2 was perhaps more played at the time, and a song that might be more familiar. It has a line about a dark Scottish lake in it.
So Synchronicity 1 was released as a Japanese-only single?
Okay.
I'm just adding that in. I don't know. I'm just reading Wikipedia. That's how I
Yeah,
that's how I roll, Dave.
Hey, why not? Go with it. And anyway, why that song, which is the obvious question?
Yes.
Because if you look at what's going on in markets, you could say there's an element of synchronicity to it. And it's something that Michael Hartman, who's the chief global investment strategist at Bank of America, brought up in his latest weekly report. While he focuses on, flows of funds, he also looks at what's going on in markets more broadly and, tries to bring some, perspective to what's happening. And so he had this chart that actually compared Occidental Petroleum's share price. I know, this is a little strange, but in any case.
We're with you.
To the yield on 10-year Treasury notes. So in other words, you've seen Occidental go up, you've seen the 10-year yield go up. So, you can look at both of those as signs that there's a bit more focus on the inflation outlook, people concerned that price increases are going to pick up from here. So what I did, just to kind of give it a broader overview, was rather than using Occidental, use the S&P 500 Energy Index. And, you go back to 2017, you see there's a bit of a relationship, at least in the chart, between these two indicators. And sure enough, first quarter of last year, they hit lows, low yield, low share price, if you think of the energy index. And since then, they've been kind of moving up. So, the comparison is definitely there, even if you take it from a broader perspective rather than just looking at one energy company, looking at energy stocks as a group. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
That 10-year at 136. Like, it's just, right? Like, you think about how long, Dave, we were below 1%.
Oh, absolutely. I mean, it certainly gets your attention.
Yeah.
And, we're still far from the kind of yields that we saw even a few years ago. But by recent standards, 1.36%, it sounds like a fortune.
I know.
It just shows you how things have changed over time.
It's all perspective, right, Tim?
Yeah. So Dave, what's the story that's telling us that the yields have moved up higher so quickly?
Well, I mean, it's telling us how much of a focus there is at this point on where the economy is headed and where inflation may be headed because of that. You got this anticipation that, the coronavirus pandemic is going to fade eventually and that, we'll get back to something closer to normal. I mean, it won't be entirely normal for sure, but you'll get this pickup in growth. You certainly see it in an economist's forecast for gross domestic product this year. And then, what happens as a result of that? And inflation is on a lot of people's minds. So you see it show up with energy stock prices. You also see it show up with bond yields.
How old is Sting, Mr. Wilson?
How old is Sting? He's got to be in his late 60s.
Yeah, good guess. 69.
Well,
69.
I know he's a contemporary of Bruce Springsteen. And in fact, I was just listening. There's a new podcast on Spotify.
Oh, I heard.
Springsteen and Barack Obama.
I just
Did you see that picture of them, the two of them?
Yeah.
It's a classic.
So what are they doing together?
They're going to pod.
The two of them together going forward?
Yeah, podcast.
Well, it's an 8-episode series. The first 2 are online now. Surprise, surprise. I just listened to them.
Were they good?
Yeah, they were good. I mean, if you've read his autobiography, you'll be familiar with some of the ground they cover. But,
okay.
He does bring a certain perspective to the party. They both do, actually.
Is it called?
It's an interesting kind of conversation.
Is it Barack and Bruce? Like, what do they call it?
I don't know what it's called.
Let's see. It's called... oh, gosh. You
We'll
wouldn't
check.
ask me that.
I'll check on it. We'll tweet it out. We got to go to news. All right, Dave Wilson, thank you so much. This is Bloomberg. Yes, indeed. Time for World and National News. Nancy Lyons, take it away.
Thanks so much, Carol. Merrick Garland, President Biden's nominee for Attorney General, is vowing to prioritize civil rights, combat extremist attacks, and ensure the Justice Department remains politically independent.
I do not plan to be interfered with by anyone. I expect the Justice Department will make its own decisions in this regard.
A New York grand jury is on the verge of getting 8 years of former President Trump's tax returns.
The Supreme Court has refused to block a subpoena from Manhattan District Attorney Cyrus Vance's office for the former president's accountants to turn over those financial documents. The justices issued their decision without comment or public dissent, but they waited to do so for more than 3 months until after President Trump was out of office. Prosecutors have suggested they could be looking into tax and insurance fraud, as well as falsification of business records charges against the former president. In Washington, I'm Nathan Hager, Bloomberg Radio.
Beginning Wednesday, small businesses and nonprofits will have exclusive access to the Paycheck Protection Program. Brian Deese heads the National Economic Council and spoke about it with Bloomberg's Jonathan Farrow.
We're going to really zero in on on providing support to those smallest businesses with less than 20 employees that represent 90% of the businesses in this country, but often have a hard time accessing government assistance.
Tune in to Bloomberg Surveillance tomorrow morning starting at 8 a.m. Wall Street time to hear John's full conversation with Brian Deese. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic in our Interactive Brokers studio in New York City. The stories that we have been reading and everyone's been putting out about some of the power bills in Texas, they are off the charts.
Yeah, so, let's say you just had severe weather in your area. You were one of the lucky few to actually not have lost power in Texas. Well, some of the power companies work in a very strange way there. Basically surge pricing. You could have a bill for thousands of dollars.
Well, basically, too, they talk about one company, Griddy, and, before the power outages, it was 0.3 cents a kilowatt. And then after, and with the surges, it was $9 a kilowatt. So you're talking about those members of Griddy paying 300 times what they were before.
Okay, so Houston resident David Astrin, who's a human resources director at a manufacturing company, said he's been charged $2,738 for 20 days this month versus $129 for the whole month of January. That's for a 3-bedroom home with a detached garage.
Yeah, they stopped using their dishwasher, their washer and dryer. They turned on as few lights as possible. They kept the heat on for their 5-month-old son. His bill for the next month set to exceed $3,000 according to his provider, Griddy Energy. Listen, from what we keep seeing, though, it looks like regulators, or at least maybe officials in Texas, are going to be like, well, wait a minute, we gotta work on this.
Oh, they're paying attention. Even Senator Ted Cruz was tweeting about it over the weekend. What I will say, though, is it really did, when I saw this story, it really reminded me of surge pricing for like Uber and Lyft. The idea is to charge more to entice drivers to come out and serve when demand is high. Same thing with electricity, and they would charge more, so then power producers would do that. The problem is the power producers couldn't produce that electricity, so they could not increase supply.
Physically impossible, so those things stayed there. I mean, listen, this is going to make us look a lot at the power grid, and in particular because there are a lot of caveats and a very special system in Texas.
Yeah, one that did not work out at all last week.
I mean, these stories are just wild. All right, you're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ now very close to the lows of the day. NASDAQ Composite Index down 312 points. That is a drop of 2.25%. 13 minutes to go ahead of the closing bell. The NASDAQ 100 Index down 2.4%. Technology shares pulling back on valuation concerns. Commodities are rallying. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers. Right now, the S&P is down 22. That is a drop of 0.6%. The Dow holding on to earlier gains, up by 84 points, up 0.3%. Well off session highs, though. 10-year yield, 1.36%. Gold up 1.4%, $18.09 the ounce. And crude surging 3.8%. West Texas Intermediate at $61.49 a barrel. WTI up now by 3.8%. So again, recapping, a technology sell-off today. The S&P is down 23, down 0.6%. After the bell, we will be hearing from Palo Alto Networks. Palo Alto shares lower now by 3.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 11 minutes left in today's trading session. Let's get to the drive to the close. James Chakmak is back with us, partner and portfolio analyst. He focuses on tech stocks. He knows this area so well at the asset management firm Clockwise Capital, joining us on the phone from Miami. So is it warm in Miami?
It's a bit chilly today. About 70.
Oh, come on.
That really hurts.
You're a former New Yorker. You know, you got to miss this February
I'm spoiled.
weather, right?
I'm quite spoiled, yeah. I don't know what winter's like.
Well, we had snow earlier.
I'll be back. All
right. So how are you? And how do you think the technology area is doing? We saw a little bit of a pullback, some concerns once again, valuation talk. How do you see it? How overpriced are we?
Slightly. You know, we anticipated, somewhat of a 5 to 10% pullback, going into the recent kind of lows that we've seen. So we have been raising cash, in our fund to take advantage of any pullbacks that we do see. Because right now, if you look at the broader market, it's trading about 23 times earnings for 2021, which is a little lofty by historical standards, but kind of the way we look at the broader tech sector, we still want to be heavily invested because these companies have market opportunities far bigger than we ever had before. They don't have the barriers on geography, on infrastructure, and ability to reach consumers. And those bigger opportunities should yield bigger returns as we look out over the next couple of years. So we're going to be tactical and surgical and opportunistic on pullbacks on the names we like.
When do you think there will be a pullback, James? And once there is one and you can deploy that cash, where's it going to go?
Well, we're already seeing it, right? I mean, the NASDAQ was, down 2% today, 2.5%? That's not little, so I think we're chipping away at it. We don't think it's going to be a prolonged one because of the fact that, or it's going to be any degree of severity with what we saw last year because of the fact that, these are real companies with real earnings. Yes, some of the valuations are high, but at the same time, these are the fastest growing companies that we've seen and can grow into their valuation in a relatively quick period, we think. And as far as where we're putting our money, we put it in three buckets. One is, what is the absolutely essential infrastructure? Those are companies like Amazon and Apple. What are the fastest growing companies that are leveraging the cloud and that infrastructure? That's companies like FinTech, like Square and Affirm. You also like companies, more established ones like NVIDIA. And then you have third bucket, which is
which are the legacy companies that can benefit from added productivity in their manufacturing and really taking advantage of right-sizing the companies after COVID. Those are companies like Whirlpool.
Whirlpool?
Mm-hmm.
Whirlpool? Is that what you
said? I mean, it's not a traditional, tech stock, but, what we're looking for in that third bucket is the legacy companies that have the opportunity to improve their productivity through improving their manufacturing capabilities and also coming out of COVID in a much better margin profile than prior.
Well, it's interesting because I actually talked to the Whirlpool CEO a few months ago, and we talked a lot about consumer habits and how, his thinking is like, listen, things are not going to change. Consumers are not going to change what they've been doing for the last year overnight, and maybe not forever, in terms of the focus on home and so on and so forth. So it was interesting. And I wonder how much of that goes into your thinking about some of the names that you want to invest in right now.
A lot, because, we really think that we will not go back to the way things were. And that's the way kind of we're looking at the world right now. Because what companies have noticed is, and employees and people in general have noticed that life does go on without having to go into the office every single day. And businesses are able to move forward and able to do so in a much more profitable manner, when you don't have to pay as much office space and whatnot, and being able to hire people from around the country. If you're not limited to geography and kind of fixed costs, you can still continue to grow your business and potentially even get more productivity out of your people since you won't have to commute and things of that nature. So, we think that we will not go back to the way things were. So which companies will allow you to help as a company, as an individual, to better navigate this new life, coming out of the pandemic? And we certainly think about businesses that we invest in that way.
Hey, James, what do you think of Snap, the company hitting $100 billion in market value? It's doubled in 4 months. I know this is a company that you followed very closely for years. What do you think of how it's doing right now?
It's remarkable. I mean, they've come such a long way. And initially I came out positive on the company when I was on the sell side giving recommendations on these stocks. But, it took a while for them to gain their traction. And obviously you had Facebook copying them. But at the end of the day, the whole case behind it, and including companies like Pinterest and whatnot, but the case behind it was that there's two ways to monetize that advertising. You can either go super broad with a lot of users and do a lot of campaigns like that, or you can have a niche product with a very, very higher engagement rate and monetize in that sense. And that is the direction that Snap went. And they have a good user base, a growing user base, and COVID has also benefited them from that standpoint. And because of the ROIs that are improving on their tech platform, ad platform, that's a company that has certainly seized on the opportunity that they originally had following the IPO.
I got two questions and I only have time for one, so I'm just going to go with it. We've got the Twilio CFO coming on later on. This stock has been on a tear this year, last year. Yep. 30 seconds, what would you ask him?
I would ask him on the kind of the analytics and the customer relationship management front. Kind of, they made some acquisitions to boost in that regard, beyond just their communication capabilities, but also how do I improve the productivity in-house and for the companies that are their customers, and being able to interact with their customers and be smarter about how they interact with those customers. So it's more, how are they helping their customers leverage the data?
Cool stuff. I'll tell you the second question next time when you come back.
Got to come back, James.
Stay warm. Enjoy. James Chakmak, partner and technology analyst over at Clockwise Capital, on the phone from a 70 degrees, warmy, balmy Miami. I'm a little bitter.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, February 22nd, a mixed Monday. But first, a headline from the Bloomberg Professional Service. The Bloomberg Commodity Spot Index now at the highest since 2013. Tech shares dragged NASDAQ 100 to a 3-week low. Oil jumps. Technology pulling back on valuation concerns. Commodities rallied. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers. Today, the S&P 500 index down 341 points, a drop of 2.5%. The NASDAQ 100 index down 2.6%. Stocks ended the day at or near session lows. The S&P down 30, a drop of 0.8%. The Dow up 29, a gain of 0.1%, holding on to gains. 10-year yield 1.36%. Bottom line, down day for U.S. equities, weakness in technology shares. So how much of a downturn potentially could we see? That question for James Chakmak, the partner and technology analyst at Clockwise Capital.
We don't think it's going to be a prolonged one because of the fact that, or it's going to be any degree of severity with what we saw last year, because of the fact that these are real companies with real earnings. Yes, some of the valuations are high, but at the same time, these are the fastest growing companies that we've seen and can grow into their valuation in a relatively quick period, we think.
A down day for the broader market. However, an update for a lot of travel names, specifically cruise stocks. Royal Caribbean rose to its highest in nearly a year after the company said bookings continue to improve. Today, we saw Royal Caribbean up 9.5%. Rival Carnival Corp up 5.6%. Norwegian Cruise Line Holdings up by 6.4%. Recapping, equities lower, S&P down 0.8. Charlie Pellet, Bloomberg Radio.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got to move.
On Bloomberg Radio.
All right, folks. Charlie breaking down those closing averages, those equity averages. We were really bouncing around a bunch today. And as Charlie mentioned, finishing off kind of our highs and lows there. S&P 500, Tim, almost an even split here. 253 names in the S&P 500. Higher today, 249 lower. You're looking at the industry groups.
Yeah, energy by far the leader of the pack in today's trade. Higher by close to 3.5%. Financials, not performing too badly, but no comparison to energy right now. Financials higher by close to 1%. The laggards include information technology, not too surprising given what we saw in the NASDAQ. Information technology down more than 2.2%. Consumer discretionary down 2.1%. And utilities down 1.9%.
And I want to mention that Tesla shares, I know Charlie was talking about some of the movers as well. Tesla, your third biggest laggard in the S&P 500, down about 8.5%. Tesla stopped taking orders for the cheapest version of the Model Y, a standard range sport utility vehicle, just over a month after its launch and barely a week after a price cut, according to its website. So we did see some pressure on Tesla share. Investors Business Daily reporting that earlier. So a little bit of pressure. It's a stock and a name that we need to talk to Kathy Wood about when she joins us.
Yeah, fortunately, that'll be tomorrow.
Yeah, because she's been adding to her Tesla position and has been a long-time Tesla bull. So looking forward to that. Let's bring in Bloomberg News cross-asset reporter Sarah Ponzik joining us on the phone in New York City. Sarah, what have you been focusing on this Monday?
So yields are really just driving the trade. And this is a continuation of what we discussed late last week. I mean, you look at the dispersion that we saw beneath equity markets today. You ran it through for us, Tim, the best performing sector, energy, at 3.5%. Your worst performing sector, tech, down 2.3%. And the NASDAQ 100 closing at its lows of the session, down 2.6%, down for a fifth straight day. The S&P down for a fifth straight day. That's also something we haven't seen for the S&P 500 since February of last year. So not the greatest deja vu to have. Granted, the moves have not been nearly as large. However, at the same time, we're clearly seeing this reflation trade take hold on one end of the spectrum, where you're seeing energy, financials, cyclical plays really outperform, and this off the back of higher yields, higher inflation expectations. But on the flip side of that, you're seeing these growth areas of the market really take a serious hit. You mentioned Tesla, and yes, there is some individual news there. But if you look at some of the worst performing companies today within the S&P 500, on a points basis at least, it's many of your FANG names. It's Apple, it's Microsoft, it's Amazon. PayPal is up there, Google parent Alphabet, NVIDIA. So you really just see this major gap. And much of this is fueled by the rising yields that we have seen.
Okay, so make that connection for us. Why was there such a sell-off in tech today, given the rising yields?
So we saw this really begin last week, actually, as we saw the NASDAQ start to underperform. You guys mentioned Cathie Wood's ARK, and if you look at ARK today we saw ARK really just get whacked. Of course, Tesla is a very hefty weighting there, but down 5.8%. Last week, we also saw some hefty sell-offs from ARK, ending the week down 2.5%. And really the reason for this is that when you have yields rise, it more so affects high growth companies, of which many of the members, most of the members in ARK are, and many high growth tech companies are. And the reasoning for this is that when you have a growth company, much of its cash flows are expected far out into the future. So when you have to discount those cash flows using a default rate or an interest rate, as interest rates rise, compounded out into the future, growth companies start to look less attractive. A simpler way to put this is also just simply that really over the past decade, even during the economic recovery from the financial crisis, it was a slow economic recovery. And you could say that growth was sparse. So the reason that growth outperformed was because it was hard to find growth, especially in value companies of the market, but just in the stock market generally. So now that you're seeing growth expectations really start to pick up, the idea is that you don't really need to pay a premium these days in growth companies to get a stronger return.
And let's be fair too, right? I mean, Sarah, the NASDAQ before the pullback that started around, I think February 12th was a high of the NASDAQ, at least for this year so far. You know, we were up more than 9%, like 9.5%. We've pulled back about 4% since that February 12th high. I mean, safe to say we were getting a little lofty.
Yeah, certainly. And to be fair, the NASDAQ is still up 2.6% this year. And this comes after a year in which the NASDAQ, I'm pulling it up now, was up close to 50%. That's after a year in which the NASDAQ was up almost 40%. So it has almost felt like this persistent, never-ending run in which tech and the NASDAQ outperformed. And many have been calling now for a rotation, for cyclical value to outperform. And that's what we've continued to see.
And we'll see whether or not people see this as a buying opportunity, whether or not they come back into the market. So stay tuned. Sarah, thank you so much. Have a great night. Bloomberg News cross-asset reporter Sarah Ponczak. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave.
Who?
Dave.
Hey, Mr. Wilson!
Hey, Dave Wilson, you're up. What's the stock of the day?
Chromadex, Tim, and we're talking about a company that refers to itself as helping the world age better. Its products include Niagen, which helps human cells restore themselves. The company also makes dietary supplement and food ingredients. Chromadex was founded in 1999 and went public in 2008 by merging with a shell company. Hong Kong billionaire Li Ka-shing and Li associate Selena Chow are among the largest shareholders. The ticker is CDXC. Chromadex's shares sank in 2008 and have never really recovered. That said, they climbed 54% last week and extended the gain today after the company disclosed a private share sale to raise $25 million. Chromadex said in a statement that a new international investor led the sale. While the investor wasn't named, the fact that they mentioned new suggested that it wasn't Lee or his associate. Now, the sale price was $6.50 a share, down 22% from Friday's close. Today, the stock climbed to $9.99, its highest price since September 2008, and it closed at $9.81 for a gain of more than 15.5%.
Now, up 100% this year?
Yep. Been a heck of a February.
Whoa. All right, Dave Wilson, thank you so much. Have a good night. You're headed home.
I'm headed home, but I'll see you tomorrow.
All right, have a good one. Safe
Thanks,
one.
you too.
Maybe it'll stop snowing.
Maybe. Fingers crossed.
Maybe. All right, Tim Stenovic there. Let's get back to World and National News. Over to Nancy Lyons we go in D.C. Hey, Nance.
Hey, Carol. President Biden's nominee for Attorney General, Judge Merrick Garland, won praise from both Democrats and Republicans at his Senate Judiciary Committee confirmation hearing.
Ranking Republican Charles Grassley, who shelved his nomination to the Supreme Court 5 years ago, called Garland a good pick for Attorney General, and he asked if the White House would influence the investigation of Hunter Biden.
I would not have taken this job if I thought that politics would have any influence over prosecutions and investigations.
Chairman Dick Durbin asked about policy at the Mexican border.
I think that the policy was shameful. I can't imagine anything worse than tearing parents from their children.
Republicans also prodded Garland to continue probing the decisions to investigate Donald Trump's presidential campaign. In Washington, Irv Chapman, Bloomberg Radio.
Well, the U.S. Supreme Court rejected a bid by Donald Trump to keep 8 years of his tax returns and other financial records out of the hands of a Manhattan prosecutor who's conducting a criminal investigation into the former president and his company. Bloomberg's Greg Storr says Trump's accountants are expected to turn over the returns without any pushback.
They've always indicated they would let the legal process play out. This should be the last step there. There's really no other place for Donald Trump to turn. Barring some major surprise, those records should be turned over in pretty short order.
Manhattan DA Cyrus Vance is expected to use the returns as he investigates whether Trump's company used accounting gimmicks to skirt taxes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's get a business flash from Charlie Pella.
All right, thank you very much, Nancy. Here's what's going on. Let's begin with Palo Alto Networks, just reporting second quarter adjusted EPS of $1.55. Estimates there, $1.43. Second quarter revenue, $1 billion. Estimates, $985. However, for the third quarter, it does see third quarter adjusted EPS in the range of $1.27 to $1.29. Estimates have been for $1.29. Shares are trading lower after hours, down now last check by about 1.3%. Down day for technology shares today. The Dow higher, S&P, NASDAQ both lower. Turned out to be a mixed Monday. Tech stocks dropped on valuation concerns. Commodities rallied. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers. Also today, we saw the Bloomberg Commodity Spot Index rising to the highest since 2013. NASDAQ 100 Index tumbled 2.5% to a three-week low. S&P was down 30, a drop of 0.8%. NASDAQ Composite Index down 2.5%. The Dow up today by less than 0.1%, higher by 27 points. 10-year yield 1.36%. Gold up 1.3%, $18.08 the ounce. West Texas Intermediate crude up 3.8%, $61.49 a barrel today. Copper briefly rose above $9,000 a metric ton for the first time in 9 years. And today we saw Bitcoin tumble by 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, shares of Twilio have been on a tear this year. Stocks up more than 20, almost 21% so far in 2021. That's after a 244% rally last year. Recent quarterly update, big beat, and the company also raised its first quarter outlook. Stock shut up nearly 8% on that news alone. Let's get an update, though, on the business, the global environment, what they're hearing from customers. Khozema Shipchandler is CFO at the cloud communication platform company Twilio, and he joins us on the phone in San Francisco. Khozema, nice to have you here. How are you?
I'm doing great. Good afternoon. It's great to be here.
Well, it's great to have you here with us. Great quarter. Investors loved it. What's surprising you about the growth and customers that are signing on with Twilio? What is kind of beyond your expectations?
Well, we had a strong performance, I would say, pretty much across the board. We are in the early innings of what I would characterize as really a generational opportunity in this space of customer engagement. I think what we found during the course of 2020 is that when customers embrace software, when they embrace agility, and in particular, when they decide to build things on their own, that they tend to be the ones that are winning, and we're lucky to be able to power a number of their use cases.
Right, and that's exactly what you guys are doing, providing the tools for them to be able to do that. How much, though, of what you're seeing is a surge to digitally catch up and expand because of COVID and the shutdown and the big move for the world to digital and e-commerce? How much is a catch up in your view?
That's a great question. I do think it's more an acceleration, I would say, than a catch-up. We feel like the shift that's been happening is permanent. You know, we've done a number of studies. I'm sure you've seen a number of external studies as well that basically suggest that businesses are not going to go back, that over 95% of them, in fact, plan to either increase or maintain the levels of investment that they've been making in customer engagement after the pandemic. So we're very excited about our prospects going forward.
Well, what do you guys do once you kind of land a customer, right? And you get kind of that initial level and, you know, relationship between you and the customer. Like, what are the next layers that you can help in terms of helping the customer with what they're doing?
Yeah, I think what's important about our business model, which is really exciting and keeps the cost down as well, actually, is that most of our interactions start because a developer inside of one of the companies that we're working with starts working on our platform, develops a use case. We notice that there's a certain amount of activity there. And once we do, we have a salesperson contact the company and we start doing some work with them. And they'll start with a use case. It might be an SMS. It might be a one-time notification of something. But then we'll offer some of the other aspects of our portfolio. It could be voice messaging. It could be other SMS use cases. It could be email. You know, now it could be Segment with the company that we just bought with respect to data. So there are any number of things that we can do for a customer as it relates to customer engagement. I'll give you a great example. You know, last week, obviously, we were all watching what was happening in Texas. And, you know, we were able to deploy a hotline in 24 hours to help them manage thousands of calls, not just with respect to all of the emergency response activity, but also, you know, the vaccine distribution and the logistics associated with that. We're not just doing it in Texas. We're doing it all the way from California all the way across to Maine as well. So it really does run the gamut.
Well, I'm glad you took us there, because that is certainly something we kick off every broadcast talking about, the latest and greatest, fingers crossed, when it comes to COVID and the vaccine. Talk to us a little bit more about what you folks are doing at Twilio to help others when it comes in particular to getting that vaccine out and communicating and communication within communities, because we know that has been something that was certainly lagging, certainly early on.
Yeah, so part of it is deploying a hotline. Another part of it is using our SMS capabilities so that we can provide patients with alerts and scheduling information. Another part of it is so that medical professionals can communicate with one another in a time-sensitive way vis-a-vis text messaging. And so if you just consider all of these different areas that allow medical professionals, patients, folks that are attempting to get the vaccine in the hands of patients, it just allows for a very seamless experience. It makes sure that patients are able to get the information when they need it. They can get it through whatever channel they want, whether it's SMS, whether it's voice, whether it's email. And these same solutions can be used to register folks and then constantly communicate with them to make sure that they're keeping their appointments and that they go back for the second vaccine as well.
Yeah, it's great. And it creates some organization. I think that many would argue that it wasn't quite there in the beginning. Hey, I want to go back to what you guys are doing and where you go from here, especially once you start working with a customer. We had on James Chakmak earlier, covers the tech sector. And I said to him, okay, so if you were talking to the CFO of Twilio, what would you want to know? And he said, you know, what's interesting is, how do you improve, you know, how do you kind of boost beyond once you start working with a customer and you are providing data and working with them? How do you kind of improve upon that in terms of productivity? And I'm curious, how do you guys think about that and taking your services to the next level for your customers?
Yeah, I'll give you a great example. Obviously, tax season is right around the corner, and one of our marquee customers has been H&R Block historically. And just in the last quarter, we've expanded our relationship with that customer as they prepare for the tax season. Obviously, there's a huge surge in the amount of activity that they see. And what we're doing is actually giving them tooling so that they're able to provide better virtual tax support using our Twilio video product. Obviously, last year around this time, the pandemic was just starting. It wasn't quite clear how things were going to play out. And so now, above and beyond the voice, SMS, and chat capabilities that we're already providing them, they can now also enhance the experience between H&R Block and their consumer base using a really simple and easy to use in-app API to deploy video to make for a richer consumer experience.
That makes a lot of sense. What about all the data that's coming into all of these customers that you guys work with, and helping them in terms of be more productive with that use of data, kind of the data overloads?
Yeah, that's a great question. So we actually bought a company towards the end of last year. It's called Segment. And Segment, their entire value proposition of the company is to really focus on data. And one of the things that they do uniquely well, they're the only company, to my knowledge, on the planet that can actually pull it off, is that they can grab data out of all of the unique silos inside of a company, put that data together, orchestrate it in a way, organize it in a way that makes it really simple to understand what's going on with the consumer experience, so that what we're then able to do is help our customers ensure that they can then deliver a rich consumer experience. So using all of these disparate data sources, we've got the proverbial one pane of glass that allows you then to subsequently deliver something that's really personalized, really rewarding if you're on the consumer end of the experience.
Sounds like a big growth area for you guys.
Absolutely. We're really excited about that acquisition. We've signed on some interesting wins recently, and I think there's a lot more that we can do with it. We're just getting started.
So, Khozema, I want to ask you, you do work with just about everybody. If you go to your website, it's Lyft, it's Uber, it's Shopify, it's Instacart, it's Morgan Stanley, it's LendingTree, it's Netflix, it's Twitter, it's Yelp. What are you hearing from those clients, which cross so many different industries? What are you hearing from them, and what are you seeing in terms of your working with them about what that tells us about how the business environment is and what's going on more broadly in the economy, maybe what kind of year 2021 might be?
Yeah, I think what's never been truer than it is today is this whole idea around the importance of customer engagement. I think we're all used to one-way experiences sometimes with our customers, and unfortunately, those experiences weren't enabled previously by technology. But now enter Twilio and some of the things that we're able to do to help really drive that rich consumer experience so that you as a consumer can do business with the clients that you really care about. You can get the kinds of messages from them that you really care about. Obviously, for our customers, it helps them drive a revenue event. But to the consumer herself, it's really important because that individual is able to get the information that they want, when they want it, through the channel that they want, without it kind of becoming this annoying clutter that we sometimes experience otherwise through these channels. And so customer engagement's the name of the game, and I think going forward, every one of the companies that we're working with, they see more share of wallet going towards these customer-facing interactions, and we think that's going to continue. We think it's part of a long-term secular trend, frankly.
Okay, so that's the trend, but what does it say? The economy doing well? Second half story? You know, from these conversations, what does it tell you about the visibility for our economy and really our business environment?
Yeah, I mean, I'm not a macroeconomist, obviously. I'll maybe kind of answer your question through the lens of our consumer experience, or our customer experience, excuse me. What we're generally seeing is a lot of strength in the marketplace. And whether it's an online retailer, whether it's an e-commerce provider, whether it's a brick and mortar bank, we're seeing a lot of traction and a lot of activity. And so I would say we're cautiously optimistic about the way that the broader economy plays out, just based on the activity that we see on our platform. We do see a significant move of that activity from, you know, sort of an in-person environment, much more towards an online environment. I think many of the things that we were used to previously attending in person, as much as I'm desperate to go, you know, to a restaurant in person, I think we're all getting used to as consumers. The idea of getting things delivered and having communications tools help orchestrate some of that. So I think you will see a shift in the way some of these organizations work, but we're broadly optimistic, I would say, cautiously so, just given what a dynamic macro environment it is out there.
Hey, one last question. In terms of, you guys seem to be firing on all cylinders. It's really impressive and impressive story and company to watch. Access to workers, any labor constraints? Where are you finding maybe problems as you move forward that maybe could be holding back your growth? And just got about 45 seconds.
Yeah, it's a great question. I don't see any real issues in terms of our ability to access talent. I think, if anything, like many other companies, what we're finding is that as everybody's working from home, there's a global talent market that we can get our talent from, and we're really excited about that.
All right, good stuff. Hey, listen, thank you so much. What a great conversation, and really cool to watch what you guys are doing. Kozema Shipchandler, he is the Chief Financial Officer at Twilio, joining us on the phone from San Francisco. As I mentioned earlier, this was one of the really top performers in 2020. Stock is up about 21% so far this year, and the company did recently update and raise their outlook for the first quarter. All right, and you can check out that full conversation. You'll find it later on our podcast feed. I'm Carol Master in our Interactive Broker studio, and you are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser in our Interactive Broker Studio. Bitcoin moving around today. Did dip below 50,000 on a warning from Elon Musk. Moving around a lot, but still up a lot for the year. We're going to check in with the CEO of Oasis Pro Markets. Recently talking to the folks over in the SEC about the regulatory environment. So we'll get to him in just a moment. First up, back to your top business stories. Some of the news after the close. Here is Charlie Pellet.
Hi, thank you very much. Here's what's going on. Carol Masser, Bitcoin right now 54,450, down now by 2.1%. Do want to begin with a developing sports story. The president and CEO of the Mariners, Kevin Mather, resigned today following the emergence of a video where he expressed opinions about organizational strategy and his views on some players. Palo Alto Networks reporting earnings after the bell. It forecasts adjusted EPS for the third quarter of $1.27 to $1.29. Estimates were for $1.29. Palo Alto Networks shares down now by 7% after hours. Down day for tech stocks today. Valuation concerns. Commodities rallied. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers. Today we saw the 10-year yield at 1.36%. S&P down 30, a drop of about 0.8%. The Dow up 27, a gain of 0.1%. NASDAQ down 341, a drop of 2.5%. Gold up 1.3%, up $23 the ounce at $18.07. West Texas Intermediate crude surged 3.8%, $61.49 a barrel on WTI. Democrats begin the final push for President Biden's $1.9 trillion stimulus bill this week, dropping any pretense of bipartisanship to quickly pass the package before an earlier round of benefits runs out. As for the economic backdrop and the outlook, Megan Green is a senior fellow at the Kennedy School.
This isn't a typical kind of downturn, and it won't be a typical kind of recovery at all. And as I've been saying since the beginning of this virus, the virus is going to dictate everything and will be determining prices and quantities. And so, it's actually the epidemiological data that's much more important than the economic data at the moment.
Airlines grounded dozens of older Boeing 777 aircraft after the failure of a Pratt & Whitney engine showered debris onto a Denver suburb over the weekend and prompted U.S. regulators to order emergency inspections, Boeing down by 2.1%. Recapping, stocks mixed, S&P lower by 30, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you for that update. Well, 2 weeks ago, today, I believe, our next guest spoke to the board of the SEC about developing a regulation battle plan for cryptocurrencies. Nice to welcome to Bloomberg Business Week, Pat LaVecchia, CEO at Oasis Pro Markets. It's a FINRA and SEC-approved digital asset broker dealer. He's also managing partner of LaVecchia Group, a privately held merchant bank. And Pat spent some 30 years on Wall Street working in investment banking and capital market senior positions. And he joins us on the phone from Darien, Connecticut. Pat, nice to have you here on Bloomberg.
Thank you, Carol. It's a real pleasure. And if I may say, I've been a big fan of yours for years.
Well, thank you.
I listen to your program. It's always on in the background when I'm on a call. I just think you're the best interviewer at Bloomberg. So this is a real treat for me.
Well, you're very kind. Doesn't mean I'm going to be easy on you. I'm just going to tell you.
No, that's fine.
No, I'm kidding. Thank you. You really started off my week really nicely. Take us back to the SEC. You were there, if I got it right, I think a couple of weeks ago. Tell me about that exchange and what they were trying to figure out, because I am curious about what they are thinking in terms of regulations when it comes to cryptocurrencies.
Great, yeah. Just in regards to the SEC, we're in discussions with our regulators all the time.
Right.
But this is really, we've been spending time over the last several weeks with the innovation groups at the regulators and coming up with ideas, sharing ideas, getting their feedback, et cetera. This whole blockchain area, what we focus on is digital securities, and I can talk a bit about that later. is completely new. I'd like to say that, well, actually, I don't like it, but it's reality. We're a bicycle with training wheels with Ferrari brakes, which are the regulators.
It's a great way of explaining it, actually.
That's where we are today. Eventually, the bicycle will become a Ferrari, but that's several years away. And so we have a lot of ideas, and the regulators know this tsunami is coming. They're very focused on cryptos right now and DeFi, or decentralized finance. We're taking it a step further and focused on digital securities, and we view ourselves as the bridge between traditional finance and DeFi. That's a direction. That's our mission statement. That's where we're heading. But they know this is coming. We call it a tsunami of opportunities, and it's a tidal wave regarding what's happening in the crypto space. And they're trying to stay ahead of it. A lot of smart people there trying their best. They're the guardians of our financial system at the FTC and FINRA, and they want to make sure that they get it right.
So talk to me a little bit more about digital securities, exactly what they are, what it presents in terms of opportunities for investors. Unpack it a little bit more for me, if you would, Pat.
Sure. Digital securities are very similar to traditional securities. So what we were approved for were equities, broadly defined, and fixed income for corporates, both public, non-national market securities, as well as privates. And by privates, I mean all exempt securities. So Reg D, Reg S, 144s, et cetera. And they represent a proof of ownership of some type on the balance sheet and are an underlying asset of a company. But unlike traditional securities, they can be programmed through smart contracts to comply with regulatory requirements and standards as well. And they can be purchased and traded just like any other security, but it involves the blockchain. So it's very bespoke. It can be very tailored, but all the back office. So I'll give you an example with GameStop and the halting of trading a couple of weeks ago. So one of the issues that have come up is it's trade plus 2 days, right? And it, in the 1960s, it was transaction day plus 5 days.
Right.
And then in 1973, and then let's jump all the way to 1994, it became trade plus 3 days.
Right.
Then it took another 24 years for it to get to trade plus 2 days. And while the UI has improved, like on any trading app you might have, E-Trade, Charles Schwab, Robinhood, the back end has been improved over the years, but it's still based on the infrastructure from the 1970s. Now, what blockchain does with digital securities, it really, it's not a revolution, but an evolution of the trading system. So it's just taking it to the technology level.
Well,
T plus 0 days.
Right, exactly. I mean, if you think about it, it's a level of, as I've read about it, just the amount of liquidity essentially that could be the result of this. Pat, hang on for a second. I have to do some news, but we'll come back and continue this conversation because it's really great in terms of where these things are going. We're going to get back to Pat LaVecchia, CEO over at Oasis Pro Markets. In the meantime, this is Bloomberg, and let's get a check on world and national news over to Nancy Lyons. Hey, Nance.
Thanks so much, Carol. President Biden says his administration is seeking to help small businesses by giving them exclusive access to the Paycheck Protection Program for 2 weeks. The director of the National Economic Council, Brian Deese, spoke about it with Bloomberg's Jonathan Farrow.
These steps we're taking today, even before we get there, are going to help a lot of businesses. The smallest businesses, including sole proprietors, people who run their own businesses who have been locked out today. So that's what we can do right now. We think that's really important in the immediate term.
400,000 small businesses have closed during the pandemic, and the president says millions more are hanging by a thread. To hear the full conversation with Brian Deese, tune into Bloomberg Surveillance tomorrow morning starting at 8 a.m. Wall Street time. Attorney General nominee Merrick Garland says he will follow the rule of law if confirmed.
The president nominates the Attorney General to be the lawyer, not for any individual, but for the people. of the United States.
While Garland is expected to be approved by lawmakers, another of President Biden's nominees is facing an uphill battle. At least one Democrat and two moderate Republicans say they cannot support Neera Tanden to head the White House Budget Office. Dominion Voting Systems is suing MyPillow's CEO for defamation. The Trump ally is accused of spreading conspiracy theories about their voting machines during the 2020 election. Dominion is demanding $1.3 billion in damages from MyPillow CEO Mike Lindell. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, and joining me once again is our own Charlie Pellet. And Charlie, listen, we've been talking about this story throughout the day. You've been following Bitcoin, which I think ended the day down about 5%, still up almost 90% in 2021. But Elon Musk, once again, talking about Bitcoin.
Indeed. Not just Elon Musk, though. We also had Janet Yellen weighing in today. We had Musk making some comments. Now, I guess we just have to back up a little bit, because earlier this month, it was Musk's embrace of Bitcoin that rocketed the cryptocurrency almost 50% higher to more than 58%. Over the weekend, though, giving a cold shoulder, perhaps, to Bitcoin, and that whipsawed Bitcoin, and that's where we saw the decline, down roughly 9%, plunging as much as 17%.
Yeah, volatility, the swings, as you said, at its lows, down about 17% today. It was up 0.5% at one point, but did finish the day just down about 5%. But it's interesting. I mean, as you said, I kind of would love to get Elon Musk and Janet Yellen together in a room and just have them talk about it. Janet Yellen has been a longtime Bitcoin skeptic. It reminds me a little bit of having Sheila Bair on recently, the former head of the FDIC. She too is a skeptic of Bitcoin. I mean, you either have people who really, are into it, or others who are not, or others who are more interested in derivatives of it, or more interested in the blockchain technology. So the conversation, though, I do feel like is getting elevated.
Indeed,
Charlie.
It is certainly one of those highly polarizing bets. I mean, you look at what the debate that we have seen over the years with Tesla stock, and there's not a comparison with the stock. What I'm getting at is just how, to your point, you either love it or hate it. But Yellen at a New York Times conference today saying that the token is, quote, an extremely inefficient way of conducting transactions.
Yeah, exactly. And I know, at least according to some of our reporting, that we believe that some of these volatile, at least over the weekend, swings that we've seen are driven by some of the individuals who are trading the cryptocurrency at home. Already, we're just, through 2 months, and Bitcoin's still a big story.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. A grim American milestone. U.S. COVID-19 deaths have now surpassed 500,000. That according to Johns Hopkins data. Tech stocks dropped on valuation concerns today. Commodities rallied. Bond yields rose with investors pricing in stronger growth and faster inflation as the global economy recovers. S&P down 30, a drop of about 0.8%. The Dow up today, holding on to a 27-point gain, higher by 0.1%. Could have seen a record today for the Dow. NASDAQ, though, dropped 341, down 2.5%. The NASDAQ 100 index down 2.6%. 10-year yield, 1.36%. Gold up 1.4, up 3.8%, 61.49 a barrel. Bitcoin lower now by 1.7%. Recapping, stocks mixed, S&P down 30, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. I want to get right back to Pat LaVecchia, CEO at Oasis Pro Markets. As I mentioned, a FINRA and SEC-approved digital asset broker dealer, still with us on the phone in Darien, Connecticut. So I feel like, Pat, in our talking to you and also just some of the research I did coming into this, I know enough. I know enough to be dangerous. So in terms of digital securities, I mean, you basically, you own an underlying asset, right? What are the advantages? Is it the liquidity aspects? Is it the security aspects? Is it that you can have fractional ownership of something that you might not have been able to own otherwise?
Yeah, absolutely. All the above. There's also the advantages. We were approved for digital cash payments for digital securities. So
right.
If you own stable coins, for instance, or eventually CBDCs. And I heard the comment earlier you had mentioned about Yellen. Mm-hmm. She actually, while she is not a fan of Bitcoin, she actually came out today and also said that the central bank should be looking at sovereign debt currencies issued on the blockchain. So she's not a big fan of Bitcoin, but right. She, in a sense, was endorsing CBDCs to a certain extent. So all those advantages you just mentioned. So if you have stable coins right now, and by that's like DAI or USDC or Paxos, you can utilize that to purchase digital securities. And another benefit of the digital securities is, and this is unlike crypto, you've heard stories that someone had $50 in Bitcoin. It's now worth $100 million and they can't find their wallet, right? So it's permanently lost. With digital securities, while the blockchain is immutable, the regulators have determined that the authoritative ledger is either the issuer or the transfer agent.
Right.
So if you own digital securities and you lost your wallet somehow, or whatever custodian was holding it, it got stolen or there was fraud. The beauty of digital securities is it could actually be burned, that digital security that was stolen, and reissued to you. So some of the disadvantages of, let's say, cryptos and DeFi are not applicable to the regulated digital security space.
So, Pat, where do you see it all going? I mean, you're someone who has spent a lot of time on Wall Street in different capacities, and you see, I mean, an aside, I feel like the conversation over Bitcoin, blockchain, digital currencies has definitely evolved from a couple of years ago. So where do you see this all going? Does digital securities take over from, I mean, I feel like we're doing it already, right, on some level. Like, where does this all go in terms of how we trade today, how we invest today?
Yeah, you're absolutely right. It's not if, but when.
Yeah.
And that could be 3 years away. That could be 5. It could be a decade, but it's coming. And, the light was shined on me by one of my partners, Joe Quintillion, who convinced me to get involved in this about 3 years ago. And I blame him. No, I'm just joking, but got involved in all this, and Greg DePrisco as well. But it's coming, and we're already there. So it's really the back end that's getting changed, not the UI, the front end.
Right.
If you think about it, and we will get there. I mean, 3 years ago, DeFi, decentralized finance, where a lot of the Ethereum, projects trade were less than $1 billion. In fact, it was like $400 million. And if you